Hello, everyone. Welcome, guys. Welcome. We'll get started shortly. Welcome, everyone. Welcome, everyone. Welcome, everyone. We'll get started shortly. Welcome, everyone. We'll get started shortly. Hey, Bill. Welcome, Bill.
Hey there.
All right. Welcome, everyone. All right. We'll go ahead and get started. As you guys know, this is our stocks, options, and ETF class. I'm going to share my screen. So stocks, options, and ETFs. This evening, the big news is that we're seeing the market pull back a bit. All right. So let's take a look at the Dow. This is the Dow index. And here we are. We made a high here. All right. And this was last month's candle. We talked about this green candle here. All right. Here was the previous month of selling. Broke support, recovered, some buying, and now we held right here, and our price is moving down. I know it doesn't look like a lot of movement on this white candle right here, but we are seeing some movement on the smaller time frames. Okay, so we no longer have a buy signal on the 240. So we've been tracking everything on the 240. All right, and we've moved it to the week, back to the weekly time frame. All right, so we are no longer looking to go long, all right, with equities. All right, and we can see that price action here in monster futures. All right, so the Dow, the Nasdaq, the Russell, S&P, they've been down all week. All right, so we continued seeing some selling today. And currently in the futures market, it's down. Okay, so the Dow currently is down 61%. I'm sorry, 61 points down currently. So all red. So the market is currently down. We are seeing a reversal. So back into the dollar, right? So the dollar index is up. All right. So as you guys know, the correlation right now is when the market goes up, right? Dollar goes down. When the market goes down, the dollar goes up. All right. Hey, Randy, welcome. All right. So we're seeing buying back into the dollar. All right, the dollar index. We do not have a buy signal yet. Still early, but we have called a rotation into the dollar pairs. Okay. All right. So we're gonna keep that in mind as we go through the markets. All right. We're gonna focus on stocks, but we're gonna link back to Forex. Okay. Hey, Gerald. Hey, Miranda. Welcome, guys. Welcome. All right. So keep that in mind. All right. So green candle here in the dollar index. We do not have a buy signal yet on the dollar index, but things are changing. All right. The VIX is still at 25. So the VIX is right here at 25. All right. So it's holding. All right. It's holding. If it starts to move higher, then we'll know that this market is really start to come down. Pay attention to the NASDAQ. All right. So the NASDAQ is breaking support here. So NASDAQ is very weak, guys. So be careful. When we'll talk about stocks, but just be careful. The NASDAQ, if you guys look here, breaking support right here, that's redistribution. All right, breaking support, that's redistribution on the NASDAQ. All right. All right, so keep that in mind. Redistribution on the NASDAQ. All right. Now on the so I want you guys to take a look at two of these indexes. So here is the NASDAQ. Here's the that's the NASDAQ, and then here is the S&P. All right. So NASDAQ is breaking support, right? S&P is looking to challenge this low right here. All right. Red candles, so definitely coming down. All right. Hey, Brian, welcome. All right. So right here, lots of selling. Welcome. So selling, right? This is on the weekly time frame. So selling is back in the market. All right. Sellers are back in. Sellers are back in. All right. So sellers are back in the market. So that's the this is the S&P. The NASDAQ, again, the NASDAQ is breaking support. You guys see that here? Let me pull that out. All right. NASDAQ is breaking support. It's broken support. It's closed below support. That's redistribution. So we'll see the NASDAQ move a lot lower. All right. So not a good week for stocks and the indexes. Okay. So like I said, we call the buy on the 240. We've got sell signals on the 240s. All right. So we've moved everything back to the weekly time frame. Here's the Dow right here. All right. Here's the Dow. Let me open it up a bit for you guys. All right. So here is the Dow right here. And what we need to be concerned with is this right here. Right here. All right. Remember, it's not what we want, it's what's happening, right, with price. All right. So we've got a really nice triangle happening here. All right. Let's bring it in right here. Bring that up. Stop me if you guys have any questions. All right. Or if let me know if I need to explain things more. All right. So we've got a channel happening here. All right. We've got lower lows, right? Lower lows, right? Lower lows, lower highs. All right. And what I want you guys to pay attention to, and this is happening on all of the indexes. All right. Right. Every time price gets to the upper channel right here, gets knocked down. All right. Made it back up here, got knocked down. All right. And now it's back here. And what we were hoping is that we had continued, right, buying to kind of move higher. All right. And break out of this channel here. All right. So that's not happening. Right. We've got a white candle here. And if that continues, we can then now move to the bottom of that channel here. And that's happening already to the NASDAQ. Okay, so keep that in mind. All right. So we are no longer long stocks. All right, we are no longer long stocks. You guys should have received a message from me today on that. All right. And I'll open the floor for questions. A lot of the sectors are up. All right. But you know, this lags a bit. All right. All right. So it does lag a bit here. We'll see that price action much better over here. Oh, wait a second. 1 second. Over, where am I? Right here. The sectors. Okay, so what we want to take a look at, I want you guys to see the sectors. And this is why we want to be careful. Here is technology. Hey, Kawisi, welcome. Here is technology right here. You guys look at the price action here. Now you see here, it still shows up, but that will change. That will change from neutral, all right, to down, all right? So sellers are back in right here. This is a daily time frame. And that selling really started yesterday because of interest rates, right? Really started yesterday, followed through today, gap down right here, followed through. Okay, so that's tech, right? Services, same thing, breaking down, right? Sellers are definitely in control, prices breaking down. Telecom, gap down, no red candles yet, but buy signal was up here and it's coming down. Home construction down in here. Home builders, same thing, right? Sellers are down in here. Financials, all right? So consumer staples, biotech, holding here, all right? So discretionary, consumer discretionary, sellers are down here. Gold down here. Breaking, look at gold, guys. Right, breaking support here, redistribution. All right. Let's see, healthcare. All right, breaking down. All right. Hey, Chris, welcome. All right, real estate, right? Red candles. So utilities, same. Materials, same. All right. Industrials, same. Green candle, but breaking down. Silver, same. And energy is the only one that's holding. All right. Energy held, closed about 90. All right. But equity markets definitely in trouble. All right. Definitely in trouble. All right. We are still seeing stocks in stock boss, right? Stocks in stock boss. All right. But that should change, right? That will, if the selling continues, which I think it will, based on the price action, this will change. But right now we still have stocks, but most of these stocks should be except for energy should be turning around. All right, energy is still holding here. There's some energy stocks still holding. All right, these are still holding. And we talked about perhaps energy, might be a good play, right? But technology stocks, and we have few in here because of what's happening. That one is holding. This one is holding. All right, so just we should not be trading, but if you trade, just be careful. If you have to trade stocks, energy might be the only sector to trade. All right. Still seeing some stocks in bull master. Energy is holding pretty solid. This one broke resistance right here. All right. So this one here, nicely in the markup phase and holding. So energy, it's the only sector I think we still have a buy signal on. Hold on. Let's see, healthcare. I thought we had a buy. Yeah. So we have a buy signal on healthcare, but that's failing. So energy is the only sector, and it was up pretty good today, is the only sector that's holding strong in that markup phase. All right. I want to take a look at Forex. All right, let's talk about the dollar for a second. All right.
Hi, David. Just like quick,
Hey, Ranjit.
quick chime in here.
Okay.
Like, so what do you think? Like, all the sector is down except the energy, right? So, like, what is your overall thought? Like, all the money is in now in energy, and how come like all the sectors are down? What are your overall thoughts?
Okay. Okay. So, even before we saw the equity markets moving higher and we got buy signals on the 240, even before that we saw a move in energy. Okay. And I don't know if you guys remember the last move in energy. If we look here at the energy sector, the last move in energy happened while the market was bearish. Okay, so, and you guys, you remember with gas prices, right? Remember gas prices went up. Crude oil went, I think, as high as, I believe it was 120 something, almost 130 or so a barrel. This was this move right here. All right, so Ranjit, there is I wouldn't know, I don't say it's a flight to safety, okay, but there is a move in energy, whether it's fundamental or economic. There is a move. There's a move in energy, and it looks like they're trying to push it back up again. And we can look here. All right, and let's see here. So here was the previous move in energy. Took a break, right? Took a break. And now here is the current buy signal. This is on the daily time frame, and now it's holding right up here. Okay, if it breaks out, right, it could move higher. It's the only sector right now, okay, that's holding. Okay, that's holding.
I think a lot of his question was to that. How is it that it's holding when the sectors are all pointing in a downward trend, and then when you look at what's going on in the Forex, it doesn't reflect that trend there either. It's like a lot of things are just not driving. Even our bull master is showing so many different stocks at the moment, and it's like just a lot of stuff don't seem to be clicking the way. I guess that's kind of what he was asking as well.
Yeah. Well, just keep in mind that things are changing quick. Hey, Arthur, welcome. All right, so everything changed yesterday. All right, that's why it's still early. All right, but there is definitely selling in the market, right? So it's so it's a bit confusing currently because, like I said, everything happened. Everything was bullish until yesterday, right? And so things are rotating. Things are rotating a bit. Now, does that mean if we look here? Okay, if we look here and just pay attention to this, right? I would use this one here. I'll use the Dow. You guys will see it here in the Dow. All right, you see that green candle here, like I showed you guys, right? That channel, right? And it price held and now it's coming back down. Okay, we were never totally out, right? We were never really bullish, right? We were trying to come out of it, right? That's what traders were trying to do, right? Trying to bring some buying in. All right, if you look here, and all of these will look similar. So Ranjit, I don't know if this will help, but if you guys look here, white candle, we needed follow up, another follow through with a green candle and kind of start moving, but that didn't happen, right? We've got a red candle right here, all right? And that's never good if we get a red candle after a white candle or even after a green candle, right? Price tends to move back lower like it did here, right? Selling pressure comes in, selling pressure comes in, selling pressure comes in. All right, so this is this week, all right? But it changed. So right now, everything is, energy has its own for whatever reason, right? For whatever reason, right? Energy is doing its own thing. Now, that could change, right? Sellers could come in, all right? But overall, the market is bearish, all right? If we look at the sectors, and we just have to go based on the price, right? Not what we think, right? So if you look at tech right here, technology, right? Technology stock, so NASDAQ, all right? So we just looked at the NASDAQ and look at the technology sector, all right? If we put, right, if we did this here, right? Right, look here.
Hey David, I got a quick question for you, it's Brian.
Hey, Brian.
Is it safe to say all this these sellers are coming in because of what happened with the Feds with increasing the interest rate?
Yeah, it looks like, it looks like that's what happened, right? Because that's yeah, they raised interest rates yesterday and everything changed yesterday. Yeah. So
because going into the end of the month, when you look at US 30, I mean, it ended on a bullish engulfing bar. And that thing didn't move for 2 days. It didn't move until yesterday. Like it just stayed right there around right there where you see those red sell signals.
mm-hmm.
Prices stayed there for like 2 days in that little zone there between support and resistance.
Okay.
So, I was just, when we just started US 30, I was like, man, I've never seen it just sit right there.
Right in here?
Yeah, it just sat there until Wednesday, and then it acted like it was going to go up, gave a buy signal for 60 minutes,
mm-hmm.
and then that's where we're at right now, with today. So the only thing I could conclude at was what the Fed did with the interest rates, and the market is just really, the market sentiment right now is just scary.
Yeah, it's and so right here, it's things are changing. You know, it was
Like all the
flying.
buy-in, it's like all the buy-in stopped everywhere.
Yes,
Completely, just completely.
yes, yes, yes. And we saw that in we saw that. That's why it's good to look at all you know, all the different, you know, markets and systems, right? And we noticed that Forex, we you know, we had Forex dried up a bit, right, and went into a consolidation. All right, always be when these markets consolidate, right, just be concerned that something is getting ready to happen. All right, so whenever the markets
Yeah.
get tight, you know, there's something getting ready to happen, and it usually you know, not every time. Usually it is a change in rotation, right? It's a different
Usually buy-in,
rotation.
right?
Huh?
It's usually buy-in that comes out of that really tight consolidation like it is now, right?
Well, it could be either way,
Yeah.
either way, either way, especially right now with the way the markets, the volatility, all right, you can either way. If we were in a bullish market, if we were in a, a long bullish market, right? Usually, yes. If we're long, we get a tight consolidation, we come out of that tight consolidation, then yes, we can go higher. But Gerald, right now it's, you know, because if we look here, for example, and it's good to go through this so that you guys can be ready for anything, right? That's the idea. So here is here's the US 30. So Brian mentioned the US 30. Look at the price action here. This is not trending, right? Look at this. Look at the price action here. Look at this whipsaw, right? Look at that. There's no real downtrend, no real uptrend, right?
Right.
So so yeah.
But
so,
is that always the general pattern for the US 30, David?
no. This is basically the Dow, right? This is basically
Right.
the Dow. So
So
no,
is this
Right,
pattern
right,
here unusual? The up and down whipsaw?
well, I wouldn't say it's unusual, right? You guys just consider this the norm.
But I guess the unusual part is happening several different market. I mean, not markets, but platforms and
It's
even
not.
in Forex, we're not seeing any real good trends.
Yeah, I mean, here is the Dow. Here is the Dow, the actual Dow, right? We just looked at the US 30. And even here, we don't have, I mean, this is a bit, it's a little better, but this is a weekly time frame. If I brought this to a daily, you guys will see that it's a lot like the US 30. All right. So look at that here. Same thing, almost identical, right? So look at that. Look at that, right? Right. So it makes it a little tougher, but you can still do well, right? The goal is you have to be flexible, nimble, right? And when it changes, like we're doing now, right? When things change, we have to change quickly with it. All right. So
you have
what
to
I'm
also know different time frames as well in order to catch those significant moments in that, right? You got to know how to run those time frames, because if you're constantly waiting on the daily, you can miss those moves, or so.
Yeah, a daily is too slow. All right, a daily is too slow, and that's one of the reasons why we brought out the 60, right? So the daily is too slow. Sometimes even a 240 might be too slow, right? Because things are not trending, right? So just remember, when things are not trending, right, we've got to reduce the time frame a bit. When things are trending, we've got to open up that time frame, all right, to catch the bigger move, right? But if you guys look here, and it's all, you know, we have to kind of read, and don't focus on fundamental, don't focus on the news. Yes, I mean, it's kind of nice to know, hey, the Feds raise rates, and you know, but it doesn't matter. We just follow the price. So if you guys look here, right, here is the markdown phase. It is making lower highs, lower lows, but look here, this is right. So Ranjit, if we look at just the price, forget what's happening out there, right? We can see here that we have kind of a trend, the trend right here. All right.
David, what's the date at the top of the crown there at the very top circle? What's the
Let me
the
bring that
timeline?
in. Let me bring that in.
There seems to be more losses in the long direction recently than probably going short. There hasn't been a winning trade look like in a long time.
Yeah, very
So
different.
so
Very different.
now it means like this new lower high will going to cross the lower low. Is that correct, David?
1 second, 1 second, let me. One second, guys.
Yeah, I lost money yesterday.
You did?
Yeah, I was wild yesterday.
I
In
hope-
hindsight, though, when looking at it, I should have known better. Like it was trending down pretty much the whole day.
Oh, okay.
Yeah, should we watching for this Fed announcement, you know? Be careful around that.
Yeah. So let's see here. Bill, that was around December of last year. Right here's when we made that top there.
So is it legitimately in a markdown phase?
Yeah, yeah. Oh, absolutely. Absolutely. Yeah, we're in a markdown phase for sure. Yeah, we are
But
not
with
in a
some of the-
markup.
but
Yeah, we're
with
not
some
in
of
a
the
markup phase. Go ahead,
With
Joe.
some of the shorter time frames is when you can capitalize on
Right.
those short swings like that.
Right. You could still trade it going up if you were savvy.
Yeah, if you know what's going on, right? If you're savvy, if you're quick, right? Like Brian, you know, Brian traded, this is not the US, but this runs the same, right? Like he traded the US 30, right? You just have to be quick. You have to understand, we have to understand, okay, what environment we're in, right? Notice we were long the market, right? We were long the market, and we were long what, last week, and now we're out, right? So when it changes, because this is what could happen. This is what could happen. All right. Just like here, right? Failed. And Gerald mentioned it. They all failed. Right here. Failed. Right here. Failed. And then here we are right here. What do you guys think will happen to this one here, this buy signal here?
Oh, it's gonna fail.
It's gonna fail.
It's gonna
Yeah,
fail, right?
I believe it will cross what is that 10, that lower low support. It will cross it for sure.
Yeah, it will cross it and it's gonna fail. And guess
So
what?
if we kept,
Sellers will come in, right? Like it did here.
and if we traded it on a 60-minute window long, we would be going against the trend.
Yes.
Basically.
Okay.
It's
Okay.
a different trend.
Okay. Okay. Okay, let's talk about this then. Okay. What do you guys think traders, okay, so savvy traders, what do you guys think they're ready to do here? I mean, just really think out, look at the patterns here. And what do
They're
you
ready
guys,
to go. They're ready to go. They're ready to push this down.
they're
Yeah,
ready
they're
to
ready to
push it
sell.
down.
They're ready.
Yeah.
They're ready to
means
go
they
short,
will
but they're
be
not going to do.
Yeah.
they,
Oh,
they, they will be waiting for to break to go up, but it's still not breaking up. It's need to go down there.
yeah. So if you, okay, so if you guys were if you gentlemen were betting on this, where would you put your money, long or short?
I would put my money short, but I would wait until I see sellers come in on the daily.
Yeah.
And close at least one daily bar.
Right, right.
Then I would
Yep.
look for an entry.
Yeah.
going
So
short.
all you need is just one red candle like this, one red candle like this, one red candle like this.
Because the US 30 has already given a sales signal on the 240.
Let's take a
It
look
has
at
already given that. So that's not right now. I've already made a decision like, yo, it's not time to get in yet. Daily, the sellers hadn't came in on the daily time frame yet.
And didn't that just get a buy signal just a few days ago on the 240?
Yeah.
Well,
Not a few days,
it
last
held
week.
it for a long time.
Mhm.
Yeah.
So if let's put it on the 240. All right. So 240, let's bring in our sell short signal. And look here, look what's setting up here. All right, so Brian is absolutely right. Okay, so here is the long, this is a 240, the long closed, right? And now it's reversing from long to short.
But if you bought on the buy signal against the trend, you could have made out pretty well if you stayed with it and just kept your eye open for the sell signal.
What you mean against the trend? You wouldn't be against the trend. Yeah, I see what you're saying. The overall trend
Right, the
now.
overall trend.
Yeah, forget about that. Okay, because that's the daily time frame. Okay, so you could have caught like Brian did, right? Brian waited for the daily here, that daily candle to close. All right. And he took that trade on the 60-minute. Okay, so yes, Bill, I know what you're saying. On the daily time frame, it's not trending. That's fine. That's fine. Right. We're trying to trade these moves here.
Right.
Between so we're trying to trade, we're trying to trade these swings, this upswing here, downswing here, upswing here, down. We just need to know what we're trading. If we try to just stay in like most folks do, right? And just, that's not gonna, and we need to know, okay, we're getting at the top of the channel here, right? We're in the markdown phase. So we know we're not gonna stay in forever, right? We're in a markdown phase, right? Horrible line, right? And we know, guess what? We're meeting some resistance here. Sellers are coming in here. This is a perfect short that's setting up here. By the time, Brian gets a red candle here, this would have come down nice, perfect. The 60-minute would be moving lower. Okay. So this is good. Now I tell you, this is good trading territory. It's really good practice, right? If you get good at this, then whenever the market gets bullish, then that's easy. I mean, that's really easy. But this is trading here. All right. And
So
what we're doing is catching these swings. Okay, go ahead.
Seeing how, is it fair to say that this is a good one to whipsaw trade? You buy going up and you sell going down, or is that not safe?
It's not a whipsaw. It's not a whipsaw because you're not buying this. You're not, your entry is not on the daily. All right, we're just watching the daily. All right.
I guess what my question is that if you go back to the 60-minute time frame, those are some pretty big swings going up and then some pretty big swings coming back down, right? I mean, couldn't you make out pretty well if you were going to stay with it you could make out pretty well going up and then wait for the trend to reverse and go down.
Yeah, yeah, yeah. That's what we're doing. Yeah.
Okay.
Yeah. But you would wait. So, so Brian isn't going to get in now, he's waiting, right? So yeah, so this buy signal here was on this break. So this buy signal here was about here. Okay, I think it was higher up. I think so here is about here. And then this move here was this move here. This move down here, from here to here, is this move. Is this move from here, the top here to here, right here, is this move here. This move from here to here is about this move from here to about here. Okay, so yes, you still have to wait to go short. All right, now there's a sell short signal on the 240, but the trick is that this could go back up like this, but then you see it on your smaller time frame. Okay, but look here. What we are hoping.
And David,
go ahead, Brian.
I didn't mean to interrupt, but this is where a lot of traders get caught, including myself. Okay, because you said one important thing, especially with this US 30. You said an important thing is you want to wait till you get that full daily candle close, whether you're going short or whether you're going long. What happens is this system, yeah, you can trade it if you're just going to get it based on the signals, but it might be hard to profit in that because we really don't know we really don't know what's going to happen. We just really don't know what's going to happen. And you have more assurance, when you see the sellers come in for this US 30, you'd be a little bit more comfortable waiting on the sellers to come in. Just so you see a sell signal on the 60 or the 240 at this time, I don't think it's a good time to get in on this US 30. I mean, I would feel more comfortable when I see some sellers come in on the daily candle.
So what Brian is saying, just like he waited, and with not just this system, but all the systems, just like he said, he waited for that green candle on the daily right here. On the daily right here. All right. The reverse is true to go short. You wait for a red candle to get confirmation to go short. So let's say tomorrow or Monday, right? You get a red candle right here. Right? That's your confirmation. Now to look, right? Look at your 240, your 60. You don't even have to really look at the 240, just your 60, and then look for trades, look for setups to go short. Because what we know here, all right, in a markdown phase, in a markdown phase, it's a little different than in the markup phase. In the markup phase like this, right? We want the price to go down. You guys know this, right? Retrace a bit, right? Right? Break, resistance, reaccumulate, and then go up again, right? Retrace, right? Break resistance again. And we could have bought here, and bought here on every pullback. It's the same thing here. Quick question about this one. Yeah, one second, Arthur. It's the same thing here. What we are doing, we shorting rather than buying on the pullbacks. When we going long, we are selling on the pullbacks. So this is the same pullback here. Pullback here, pullback here, pullback here. Even here is a pullback here, pullback here, pullback here. It looks different because it's short. We go in short. But if you flip this, right? If you flip this like here, so now you buying here, you buying here, you buying here, you buying here. Here you short in here. 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 If you short it here, that's a risky trade. That's a very risky trade to short here because you're shorting against the trend. If we short it here, that's a risky trade, right? This is the better trade because we're going long with the trend. Shorting here would be risky. Same like here. If we bought here, that would be risky. If we bought here, that would be risky. If we bought here, that would be risky. If we bought here. The better trade is to short here because you go in, it's in the markdown phase. Price is going lower. And the better, you guys, if you notice, the better trades are the short trades, right? So if I did this, if we bring in some short signals, so we always need to know the environment that we're in, right? All right, so not great trades, but at least profitable trades, right? Here is a profitable short. Here is a profitable short. Not a great trade, all right? But the bigger moves, look here, the bigger moves are to the downside rather than to the upside. These are just pullbacks, all right? Giving traders a better price, right? When the price moves up like this, you're actually getting a lower price to short. Yes, I know it's higher, but when you shorten it at a higher price, then it really is a lower price to short. That makes sense?
Yes, because the overall trend is marked down.
Right, I got it.
Yep. So Bill, we wouldn't trade this, right? We wouldn't trade it. We would just use it, all right? Especially with the US 30, we use this as a guide. And what we should be doing is using this to get ready. So like, let's say we went long, right? And we know, okay, we've got our channel here, our wall. Just think of this as a wall, and guess what? We're getting close to this. We'll know that, hey, we're getting close to sellers. Sellers should be coming in near that area, right? Near that zone or whatever you want to call it, right? And we should be getting ready to get out, close positions like we did here, and now know that the better trade is to go short. Look at these move shorts. Look at these move shorts, right? All right. So that's the way we think of it. Now, we don't get discouraged, we just get ready. There's a lot of money that can be made here. There's money that could be made here, money that can be made here, but a lot of money can be made here if we understand, if we know the environment that we're in, right? Not even what the market is in, just what the US 30 is in currently, and draw out our lines like this. And then we could be ready. Even if Brian decided, hey, I know what's happening here. If it fails near here, he doesn't have to wait for a red candle here. He could get in on a 240. He'll see that price action on a 240, right? If he wanted to be a bit I wouldn't say risky, but a bit aggressive, he could say, hey, I see myself, look here, I see my my buy closed here, my long closed here, all right? My long closed, great. I'm going to take profits. I understand what's happening here. All right. I'm expecting sellers to come in. If they come in and I get a red candle here, I get a short signal, I'm in. So by the time that red candle, you get that red candle down here, guess what? He's already in up here. By the time he gets a red candle here, guess what? It's all the way down here and he's in the profit. If he waits for this red candle, all right, guess what? Like this red candle here, he's lost some profit. All right. So by knowing this, understanding where you are, that gives you an edge and you can get in before everyone else. All right. And worst case, you know, it changes, you get out, right? But it's good to know that, right? Sellers came in here, sellers came in here, sellers came in here. The overtrailing trend is in the markdown phase. Hey, I'm going to take some profits. I understand that my limitation, I have some limitations long. I've got some limitations long. I've got a, you know, I've got a channel right here to block me from moving higher. All right, let me flip my trade and get ready, right? Change the hat, right? Right, be nimble, be flexible, right? Anticipate sellers are going to come in, right? And then look to go short. All right, this here is important, right here. This here will set this up. And this here will set you up, right? Will set you up to get ready. And this is trading. This right here is trading, right? This right here is pure trading. Yeah. And it's a lot of volatility, but it's trading territory. You can just get in and hold it. All right. All right. Otto, you had a question for me?
Yeah. I kind of forgot, but I have a second question.
Okay.
Earlier, you mentioned, you know, the savvy traders being quick and all. What do you think about trading right at market open where it's really volatile? I kind of see like a pattern where you normally, if you can, you know, when it starts off and then it goes down, if you catch the bottom or near or close to it, then normally it goes all the way up, and then you're making like so much money right at the open. And kind of like the same thing with if it's going all the way up, and then if you're shorting, it'll go down. So just kind of your general idea on that. Like, what do you think about trading right at market open? Do you recommend that?
Okay. So I would say to that, trade the price. All right. Trade the price. Okay. So there is, with every market, there's a rhythm to the market, right? With stock. So I'm assuming you're talking about the equity market. So 9:30 a.m. when the stock market opens up, generally this is what happens. All right. So we'll see the price action in the futures market. Normally, all right, there is a rhythm to the market. You will have buyers come in the market. So you might see the futures market up, right? And in the morning, it might be up, right? That this isn't a bearish market. You'll see buyers come in the morning, and then the short sellers will come in the afternoon or mid-morning to take the market back down in the direction of the overall trend. All right. When the market is, so if the market is short, going short in the markdown phase, right, you'll see buying coming in the open, right? So buying come in the open, and we call that, you know, we call it the dumb money, right? So the dumb money will think, hey, prices are low, prices are cheap, right? Let's say the market closed at a low for the day, right? So traders will come in, all right, in the morning and get in, right? In equity markets, traders never, the savvy traders never trade the open. They never trade the open. So 9:30, 10:30, right? They don't trade. All right. That's why we use sniper, right? So when we trade sniper, we're taking profits from those traders. All right. And by the time, that's why we sniper, you guys will realize by 10:30, 11, we out. We out. So we'll get in on Friday with sniper. All right. We'll get in on Friday late at the end of the day, late on Friday, so we can lock in positions, right? Friday, we want that market to open, get all that, whether we're going long or short, get all those buy-in, let's say, and then we're going to get out. And then you guys notice, those of you who trade sniper, like Bill, you'll notice later in the afternoon, it will go the other way. All right.
Yep, doesn't take long.
Yeah, it doesn't take long. All right. So Otto, that's not a good way to trade, because they're shocks. Think of professional traders are shocks.
So David, so on Friday, like it doesn't matter which stock or index, we just buy that on Friday and sell it on Monday.
Yeah, but
Mid-morning?
with sniper, you have sniper too, right? We have catalyst, we don't buy any stock. We have catalyst and we see volume. We look at catalyst and some volume that's happening, but that's the idea. And I'm just referring to that open, right? Where Arthur might be looking to buy at the open. So let's say Arthur buys, let's say Arthur gets in, let's say he buys here at the open, all right, to go up. We want Arthur to buy at the open. So we want him to buy here at the open to push our stock up. But what Arthur doesn't realize is that we are going to get out here and take profit. And now he's going to be holding the bag. We need Arthur to buy. We need him to buy.
I mean, like I can see the pattern where it goes up briefly, and just for that, for like the first 5 to 10 minutes of the open, you can make a lot of money, just exit out.
Yeah, but you're playing with sharks.
Yeah, no, there are some days where the first bar is just all the way up, and then the next bar is just all the way down. So I get what you mean. It's just really risky.
Absolutely, yeah, and that would be traders like us who are getting out of those trades. We're taking those profits, but we need traders to buy at the open, to push the price up so that we can get out. We need you to buy at the open, all right, to push the price higher so that we can get out. If we don't have buyers at the open, right? If we don't have traders that don't know what they're doing, right, to buy at the open, we can't get out. So if you buy at the open, you're doing it like everyone else. Don't do that. Okay, a better trade would be to don't do anything at the open. Okay, wait, right? Wait, and then perhaps go short later in the afternoon. Okay, especially when we're in a markdown phase like this. Okay, now the reverse is true, right? The reverse is true when we're in a markup phase and we're bullish. All right, where traders, what they will do is they'll push the market lower at the open, right? So they'll push the market lower, All right. And what we will do then is wait. All right. We won't short it. We would wait. Okay. Once we push the price lower, we'll get in at the bottom. Okay. And then look to push it higher. But it all depends on here, right? Markup phase, we're looking to buy, looking to buy, right? Buy, we keep buying. Markdown, we're looking to sell short. Okay, that makes sense? So Arthur, that's not a good way to trade. All right, if you're going to trade, I wouldn't trade at the open like that, because that's where you have a lot of volatility from about 9:30 to 10:30. That's a lot of volatility, You don't have any real direction. And that's where we are able to, we are able to get filled. And Brian knows this. I mean, Bill knows this. Bill trades sniper. All right. Ranjit, you're starting, you trade sniper, but you'll figure it out, right? We are usually by 10 o'clock, we're out of trades. And all we want is that pop. We need that pop. We need buyers to come in, get that pop, and we out. So if you play in that territory, if you play in that open, if you trade in that open, you're gonna lose. You're just going to lose. All right. So I don't have a strategy for that. All right. Other than what we do with sniper. But I wouldn't. That's a crazy time to trade at the open. At the open of any market, even Forex, right? So trading at the market at 3 a.m., right? You're gonna find better trades with Forex, right? You're gonna find you're gonna find around 4, right? 4:35 is when you'll get the actual move, the actual trend of the day. All right, by 4:35, 5:30 a.m., right? Eastern time, that's when you start your trend, right? You move your direction for the day. At the open, market opens are crazy. That's when we are taking positions, closing positions, really taking profits.
Yeah, David, that's a good nugget, man, because, I can remember starting out, trading in the morning like that. When you saw that signal, we got it, like at that time. And then you got it, you go get in the bed, you wake up at 7 o'clock, and it wipes you out, and you trying to figure out what's going on. So, at the end of the day, it's about being extremely patient. I know a lot of, and I'm still guilty of it, but when you see that signal, you want to just jump in and get it.
Yeah.
But man,
I know that feeling.
Yeah. Yeah. So just understand, there are sharks out there, right? And we are bait. As retail traders, we are the bait. So we can't, we can't be in, we want to be in calm waters. Calm waters. Right? Calm waters. Because they're hiding. And they want you to trade in all of that volatility. Right? We do like volatility, right? But we want controlled volatility. And we want volatility, not just random volatility, right? We want control. And just know that at the open, right, it's just a lot of crazy volatility. Okay. But just know that once you become a shark, right? Once you become, and you guys, right, you becoming sharks, right? Then you will be on the other side of the trade. Sniper trader, I mean, I think we're batting right now. We had a good trade I think one of the trades was at 175%.
Oh, it's huge.
Yeah, you took that one, Bill?
You bet.
Yeah.
Yep.
Yeah. And this is a difficult market. And I think, we still batten, we take a lot of trades. We take 3 trades every week. And we are 100 and something trades, and we still at about 70, 74, 75%. Okay, which is huge considering this market. But sniper trader, like its name, sniper, right? Sniper, we in and out, and we are really shocked with that system. I mean, we get in at the end of the day, Friday, no one sees our orders, right? No one sees our orders. End of the day, 3 o'clock, 4 o'clock, market's done, right? And then, boy, market opens at 9:30 by 10, right? By 10, 10:15, 10:30 at the latest. Sometimes we'll keep over, but we out. All right, we out. And very clean, right? Very clean. All right, so just know that we took that capital, we made money from someone else that didn't know what they were doing. Right? That's trading at the open. Right? So, and guess what? It is what it is, right? It's a zero-sum game. It's a zero. There is a winner and a loser. And we need to be, that's why learning this stuff here, and I know it's hard, learning this, figuring this out, right? You have to be on the other side. Your thought process has to, every system that we build, every system that we have is so that we are on the other side of the trade. It's not perfect, right? But we want to be on the other side. If we're not on the other side of the trade, right? If we're not sharks, right? Getting that capital out, then we're the bait. That's the choice, right? We can be the shark or we can be bait. And it's that simple. It's that simple. So we have to understand, right? We want to be in calm waters, right? That's why I send out this trade on Brian, right? The US 30. That's an amazing, powerful system. But it's if you're not aware of this, it will eat you up. All right. So not only are traders out there, there are traders out there. We have to be aware that there are traders out there. All right. When you look at these markets, you got to look at, these are individuals that are out there and they're looking to take your money. They're looking to take your money. And the better they are at doing that, the more they make and the more we lose. Okay, so we gotta, so every time, Arthur and everyone, when you guys think of putting a system together, a plan together, a process together, you notice we always know where they're hiding. Right? We always know what the price, where the price is. You notice I will go through the price, okay, and I will go through the price and go every day we go. You miss 1 or 2 days, you miss a week, you're done. You got to start all over again. Because if we don't know where they are, right? If we don't know, we talked about energy, right? If we don't know that they're buying energy, right? And we are, if we don't know what they're buying, where they are, and they love to hide. That's why we have all of these tools. They love to hide, right? That's why we have these red candles. We need to know. We need to know, hey, they're not buying anymore. They're shorting, right? That's why we do this. Okay. But we got to get tough. We got to get real tough. right? We got to get real tough and get out, right? Stay in. All right. Does this help?
Yep.
Yeah, good stuff.
Yeah, I think sniper, you know, we don't talk about sniper a lot, but I think sniper is a good sniper, monster scalper, you know, but sniper is a good system, I think, for new traders to understand how quick you have to be and how precise you have to be. Wouldn't you think, Bill? Did sniper help you, Bill?
Yeah, it helped me. You know, a lot of it I had to learn as I went to what trading options was all about. But yeah, it was definitely a good rollout. I've been with it almost a year now.
Yeah, yeah. And what it does, it forces you not only to take the trade, but to just get out. Quick, be quick, be quick, be quick, be quick, be quick, be quick. All right. So I'll end here. Keep an eye on let's see here.
So David, just a quick question. So like as you are saying, like we just have to be quick, right, and keep watching the market. So like how about like yeah, I totally agree that's one kind of trader. How about like other type of traders who can just buy a little bit, you know, and who are busy at their work, right, and like who can buy and like later on come out in a day or two and sell it out. So that what kind of those strategy they can follow? Just the swing trade, or
Okay, so
is there
yeah,
any other
so
good trades? Yeah.
so when I say quick, I don't mean in executing the trade, right? But thinking quickly. Like, you know, things change pretty quickly from one day to the next. I mean, you know, the markets were moving up, and then in one day, it basically changed. That's quick, right? Wouldn't you think?
Yeah, I get your point, but like yeah, I was just trying to those will be more suitable for people who can sit there and watch, right,
No,
and just get
no,
in and
no,
out. What
no,
about the
no,
people who don't have time to sit and watch?
no, 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 no. No, no. It's trading period. So let's take this for example here. Okay, this is a forward time frame, and forward time frame. That's not day trading, right? That's not even swing trading. I call it an extended swing, right? A good swing is it's a 60-minute time frame or 1 hour time frame. Okay, look here. So this is a forward candle here, and here, this candle right here to right here changed the whole direction of this trade. It was going long, nice and long, all green candles. This one candle right here, so 4 hours, 4-hour candle right here, changed the whole direction. It no longer was going long, it went short. I can show you a daily. I can show you a weekly. I can show you a daily candle where in one day, change the whole direction from long to short. And that's trading. So we need to be quick, not just quick in execution, but quick in thinking. Right? So as a shark, I'll go back to we got to be quick. We always have to be ready, right? So yes, you could be working, right? And we all have things to do, but we need to log in, right, to our AnyDesk and watch it. it's our money on the line. It changes quick. It changes quickly. All right.
David, I have a quick question.
Yeah,
Sorry.
1 second. So let's say we know we're going to be busy for the week. Don't trade. If you know we're going to be busy, you're busy with work, right? You're traveling, you're on vacation or whatever, don't trade. Don't trade because you're going to give it to the market. As traders, we have to pay attention to it because it does move quick, and we have no control of that. And it's not just the US 30, it's not just futures, it's not just Forex, stocks, right? Stocks also, which generally moves slower, but it changes on every time frame. In 1 month, we can see where the whole market could be bullish, and in 1 month, everything changed. Sellers come in, and all of a sudden, markets are going down, and we wonder, hey, what's going on? Rather than, right, being aware, right, watching things, and then cut our losses. Okay, so Ranjit, yeah, so that's, yeah, quick in executing the trades, but quick in our thinking, right, trading in the zone, mindset, right, all right, and understand that these markets move quick, guys. They move quick, all of them. All right, Arthur, you have a question?
Yeah, talking about patience, what do you think about this goal? Instead of try to make big money in a short amount of time, I don't know, maybe like 20 to 50 bucks a day. If I can get a goal of making 20 to 50 bucks a day, I think that builds consistency. And well, for me at least, I know everyone's different.
How so?
So how so what?
Yeah, so what would happen if you do not make $50 a day?
Oh, cut my losses short while they're low, and just
okay, what if I said, Arthur, okay, tomorrow is Friday, I want you to make $50 a day. What would you do?
I try to look for good setups.
And what if there isn't any good setups?
Then I won't trade.
Might you force a good setup that's not there because you have to make $50 a day, because you want to make $50 a day? Could you force something that's not there? Do you think that might happen?
Yeah, that could happen. That did happen too. So yeah, I get what you mean now.
Okay. Yeah, so we don't want it. There is no, now you can have a yearly goal, right? You can have a goal. You can even have a monthly goal, but it's not a set goal. All right. So we can have, as traders and as trend following traders, that's what we do, travel. We could understand, right? Trying to do $50 a day or any amount, right, is a recipe for because you're going to force trades, right? Force opportunities that are not there. So we won't be patient. We're not going to wait. All right. Understand it's not about making $50 a day. Understand is that when we do make money, we want to make as much money as possible. What that means is we want to stay in the trade as long as possible. Okay, so we could have, right? We could have day after day after day after day where there's nothing, right? And we could have perhaps the last week of the month where we've made enough money, right, for that whole month. Or we could have a whole year, right? We could have 3 months, all right? And we see that a lot, not 3 months, but we could go into 3 quarters of the year. So the first quarter, January, February, March, April, May, June, right? We can go first quarter, second quarter, third quarter, and then make enough money in the fourth quarter to make our year, right? Just like sports, right? Right? You can be behind, right? You can be behind the beginning of the season and then finish off strong, same thing. Okay, so that idea, boy, you need to get some coaching with me, Arthur. You really do. You've got to get some coaching. Okay, because that thought process, that's not a very good thought process. Okay, and I'm not picking on you. I'm just saying. Okay, because anyone, yeah. So we have no fixed goal when we go into trade, right? We are wide open. Our goal is to cut our losses. Your main goal when you trade is to cut your losses, right? And we know we can do that when the price breaks support, right? And then we stay in our winning trades. Whatever happens after that happens, but we've done our job. That's the mindset we want to have when we go in. Okay. All right. So, but I would recommend, Otto, you know, get with me, you know. I tell you what, I'll get with you for free. All right. I'll give you some coaching because I don't want you to do this. I'll do some coaching for you for free. All right. Because that's not good. That's not good habits. So get with me.
All right, good. David,
Okay.
count me in also.
I shouldn't have said that. All right. Yeah. But I think Randy, I think I gave you. Didn't I give you some coaching? I think I gave you some coaching, didn't I? I thought I did.
No, we just spoke a little bit. So
okay, yeah. Okay. Yeah, we'll get together. Yeah, absolutely. Okay. Yeah, we can't, we don't want to have those, we don't want to have that stuff out there, right? We want to build good habits so that we have a chance to succeed. Okay. All right, guys, I've gone over. All right. Keep an eye on, I wanted to go through this, but keep an eye on the dollar pairs, right? We call in an early rotation in the dollar pairs. All right, so we're starting to see some movement in the dollar pairs. Forex is opening up a bit. We have 32 pairs, right? I think we were down to 22 pairs that were trending. So we have more pairs. The dollar is moving higher. All right, so the dollar is moving higher. So we're going to call a rotation in the dollar pairs. Right here. Here's the dollar index, right? And right here. Okay. Equities, just stay low. If you guys have to, if you know you have to trade energy, you can trade energy stocks, but I would be careful with everything else. All right. And we will be looking for the, you know, to see what happens on the US 30. And like I said, we brought in the NAS too. Right, the NAS 100. All right, I want these two systems to be very, very powerful systems. All right, we're gonna spend some time on these. All right, so that you guys are making money. All right, so and then obviously cryptos. Where's Chris? Chris, I'm sorry, buddy. Nothing with cryptos. Nothing with Bitcoin, Chris. Still at 20,000. All right, still at 20,000. All right, guys.
I know it's acting like a stable coin.
Yeah, right. All right. But this is a good lesson, though. This is a good lesson. You can see they can consolidate for a long time, right? They'll consolidate for a long time. All right. But when they break out, they can break out in a big way. All right. Take care, guys. I will see you guys on Sunday. All right. On Sunday. And Arthur, you get with me. And Ranjit, you get with me also. I'll give you guys some coaching. Okay. All right, guys.
Thank you so much, David. Really appreciate that.
Take care, guys. All right. Have
Thank
a
you
good
so much,
weekend.
David.
Okay. Bye-bye.
Take care.